Hello, everyone. This is Jordan. Welcome to the Daily Gold YouTube channel and our Friday weekly recap of precious metals markets. Thank you so much for tuning in. Hope you all had a great week out there. If you're new to the channel, go ahead and click that subscribe button. I'd really appreciate it because we have a lot of great content coming this year, including this month. I am going to be recording my book and putting the videos on YouTube. So thank you for that. Now, the story of the week, we had some strength in precious metals led by gold and silver. Miners underperformed a little bit, but for me, the real big takeaway on the week was we have gold closing at a new all-time high against foreign currencies, both in terms of a daily close and a weekly close. So I have a lot of charts to run through. I'm going to try and be quick. When I say that, I'm usually not, but I am going to try and be a little bit quicker so we can keep this video the perfect length. Let's get right to the first chart. Okay, so this is my gold verse chart. And no, I didn't forget to type something in the title. It's when I say gold verse, that's just mean how is gold performing against all the other markets and assets. And so here we have gold. These are line charts, the daily line chart. So this is gold against foreign currencies. This is gold against the S&P 500, gold against commodities, gold against bonds, TLT. So the real focus on this chart right now are these two. I mean, we've talked about gold against the 60-40. Bonds have been really weak. Gold has been crushing bonds, but stocks have been too strong. So that's what's been preventing gold from breaking out against the 60-40. Interestingly, gold against the S&P, this thing has been curling up lately. So now it's up to 0.47. We have this major resistance at 0.50. And people, I mean, I've been saying this for years and years and years. When you have gold outperform the stock market, that's when you're in a real bull market. And so this outperformance from gold, that's what's been missing. And if we can see this year in a real breakout, I mean, I'm telling you, it's going to be fantastic for the entire sector. It's finally going to feel like a real bull market. So this is, as always, the most important thing. Gold against foreign currencies, this also tends to be a leading indicator because, and I've talked about this in the past, gold against foreign currencies, this thing, and you'll see this in my book when it comes out, this thing breaks out and it makes new all-time highs before gold does in US dollars. So it tends to be, not tends to be, it really is a leading indicator. And especially recently in the last decade or so, during a secular bull market in the US dollar, in a time of dollar strength, or a time of all the other currencies just acting like shit, to be honest. But here's what we're looking at this week. Specifically this move right here. This, I know it's hard to see. You'll just have to trust me. This is a new all-time high, both in daily and weekly terms. So this is a clear breakout. Here's gold in dollars, which we normally look at. We'll get to that in the next chart. So here's the daily candle chart, 150-day moving average here, 200-day moving average here. Why do I have the 150-day? Well, in secular bull markets, when gold is correcting, it tends to come down to either the 50-day, 100-day, or 150-day moving average. So that's why now I'm looking at, I don't want to jam up this chart with 5 moving averages. That's why I'm just looking at the 150-day and the 200-day. So the 200-day, this thing has been coming up 25.10 now. So this thing is 2,500 a week ago. So this thing could be 2,600 in a couple months. I mean, this thing, we're looking at it, this thing could be up here in a couple months. So it's not out of the question that gold consolidates like this and at some point it tests the 200-day, retests it. Now, I apologize if you've already heard this, but some of you may have not. If you look at the 3 times gold broke to a new all-time high, it made its first big move, then it came back and corrected. It bottomed in those 3 times at the 200-day. One time in 2009, I think 2010, it came to the 150-day more so than the 200-day. But let's just round that up and say in all 3 cases, gold came back to the 200-day moving average. So if we see gold continue to consolidate, it comes back, tests the 200-day, like that, and you have gold looking like it's going to break out against the S&P at the same time, that is going to mark an incredible, incredible buy signal for gold. So I know I'm getting ahead of myself, but short term, good action here. there is a gap here after today. You like to see the strength on the strong jobs number. We can see a bit of a sell-off today. This line right here, I think, comes in, what is this, around 27.15 or 27.20. So there is resistance here. And I don't mean to say we could repeat and see this come back like that, but I don't think gold is going to move like this and kind of blow off in the short term. So really good move in gold, but it's coming up on resistance here, 2750, 2800. So maybe it continues a little bit more, but I expect we'll see some more selling at some point eventually. But at that point, maybe this is really solidified here as support. 20, 26, 25, this area. And the 200-day, again, this thing's coming up. So I like the short-term action. Doesn't mean the market's going to blast off just yet. Now, if we saw silver move above 32.50, that would be really interesting. So this is stiff daily resistance. We know 32 is big resistance on the weekly. But again, look at the candle. Not the strongest close. I mean, it closed well off the high. So a nice little double bottom here. It's back above the 200-day. But this candle and the fact that we have resistance here at 32.50, that doesn't lead me to think we're going to see that much more strength on this little rally. So in the short term, maybe a little bit more strength before we start to see some selling. Okay, weekly charts. I like the look of this. I have to be honest. I really like the look of this. Nice strong candle here in gold. And the weekly close, I mean, is this the second or third highest weekly close ever? I mean, it might be. So this is interesting. The weekly actually looks better than the daily for me. So, but again, maybe we see a little bit more strength in gold, up to 27.50, maybe even 2800. Then you could get some more selling, and you'll see that on the weekly chart. I do like the weekly close in silver, even though it came off today. Did it trade up to 32 today? It may have touched 32.00, but this is big resistance here. This is big weekly resistance, people. So I would be really surprised if we got a strong weekly close above 32 in silver. So silver is going to have to test this resistance. It already tested it, really, at some point this week. As you can see, the close is here, but this was the intraday peak. So that's resistance. The weekly line chart here you have the 400-day, 80-week, 20-month moving average here. Again, really strong support here. This is interesting. We'll see if silver can build on this. But again, you have this stiff resistance at 32. So that's where we are. The thing for silver, I should mention this. 2 of the last 4 weeks, you do have a bit of a hammer here. This is a bullish hammer here. So it bounced off $29, which is weekly support, a couple times already. So for me, I would just like to see silver. Can we see silver maintain this level of support and not close below it on a weekly or monthly basis? That to me would be bullish as it builds up more support here. Okay, let's get to the stocks, the miners. And okay, I'm only halfway done here, and this video is getting long. Okay, I know I've mentioned this before. This is mostly for the new people who are listening, but also a reminder, gold stocks have really bullish bases here. Look, the money, I mentioned this in the past video, you look at the ETF assets in all gold stocks divided by ETF assets in all stocks. People, that's at a 17-year low. So nobody owns gold stocks, and yet they have this super bullish technical setup. I mean, look at this. GDX, this is a 4.5-year base. This is a 4.5-year base. XAU, 4.5-year base. XJD, again, this is a Canadian GDX. So this is removing the strong dollar. This thing is at a 14-year base. I mean, look at this. This is almost a cup and handle. And you have GDXJ. This is a 4-year. Yeah, this is a 4-year base, not quite a 4.5-year base. This, by the way, is very similar to GDXJ, but I like the chart better because it has a longer base here. So, I mean, people, these are setting up for a really big breakout at some point, I think, in the next 12 months. And that's why if you don't own the stocks, or you do own the junior stocks and you're not a subscriber, you should highly consider subscribing to our premium service. We're focusing on the best companies, the best juniors that have the most upside potential right now over the next couple of years. And you have to err on the side of quality until gold breaks out against a 60-40 portfolio and really gets moving. After that, you can go a little bit lower on the quality scale because more money will be coming into the sector. But people, right now, until we get that big breakout in the stocks and the crack in the stock market, you want to be in the highest quality juniors that have the most upside potential. So we're mixing and matching there. And if you subscribe, you can look at some of my recent updates, my company tables. You can see my favorite 10 companies, my watch list, my secondary watch list, how much cash these companies have, a paragraph or two of every important thing you need to know about them. You can look at these and get completely informed on what we're covering and buying and following in like less than an hour. That's why I make these tables, to save you time. So anyway, head on over to the Daily Gold /premium. Would love to have you come aboard. Thank you for listening. Now let's get to the rest of the video. Finish things up with the miners. Weekly charts here. And we did get a good rally. Not a good, I mean, it was a decent rally in the miners. This was really shitty in SILJ. I think this was only up 1%. These were up, I look at my notes here. GDX, this was up 2.8% on the week. This about 2.4%. We can see here, this is where the resistance is, the red line. So look, there's a little bit more room for this rally to go. And you can better see that on these daily candle charts. So for GDX, closed at, call it 36, resistance at 38, maybe 39 if it gets some legs. GDXJ, closed at 45.32, looking at resistance at 48, maybe a little higher. Again, if this move goes longer and larger than I think. SILJ, I mean, not a great candle. It's below the 200-day, so closed at 10.5, resistance there at 11.23. So looking at these, I do think we'll see a little bit more of a rally in the miners, but really nothing that special yet. And if you look at these candles, I mean, just an ugly candle today. This is a distribution candle. So nothing too exciting. Thank you so much for sticking with me for the entire video. A little longer than normal, so I appreciate your time. And let me know what you think. Leave a comment. Would love to hear from all of you. Thank you so much for tuning in, and I hope you have a great weekend. And I'll see you back on Monday.